You probably heard that there's a wealth gap in this country between both homeowners and renters. Well, how great is this gap? How has it changed recently? And how do homeowners generate so much more wealth? But before we jump into that, make sure you hit like and hit subscribe below to stay on top of all of the latest Huntsville, Alabama real estate news. So the most recent data that we have on this is the 2022 census, where homeowners had a median net worth, which was 40x that of renters. It was $396,200 versus only $10,400 for renters. The average is actually much larger, a much larger difference, a $1.37 million versus $56,000, because you have all the billionaires factored into that. That's throwing off the averages. So if you look at the median number, which is really what you want to look at here, again, a 40x difference, and that number is only increasing. Over the past 33 years, we've seen a 70% increase in the median wealth gap between homeowners versus renters. And of course, the average is an even larger number with a 250% increase. So you might be asking, how do homeowners generate so much more wealth? Are they just better savers? Do they have naturally higher salaries? Well, the real reason is through, again, this home ownership, and there's four main principles that help generate wealth through owning real estate. Number one is appreciation. And so not only appreciation, but when you get a mortgage on a home, it's a leveraged appreciation with a loan. And this is one thing that sets real estate apart from other assets, such as investing in stocks. So for example, when you own a home and you get average inflation appreciation of say 5%, you're not just getting a 5% increase in your money if you borrowed money on the home. So for example, if you put 5% down on a mortgage on a home and the home went up 5% in value, then that means you just doubled the amount of money that you initially invested because you only had 5% into it, which is really an amazing thing about real estate, because when you buy real estate and you're leveraging it and you're putting money down, that's like having a business partner. Your business partner is the bank. Typically, a business partner is going to want a return based on the amount of investment they put into the home. So for example, you put down 5%, the bank puts down 95%. The amazing thing about real estate is that bank does not want any of the appreciation from that asset. They're only looking for the interest each and every month, where you as the investor or the homeowner get to capture 100% of that appreciation, which is different than any other investment out there. So the second main way is this idea of principal reduction. Every mortgage payment has two main components. The first component is paying the bank back the interest that they're owed for loaning you the money. The second component is the principal reduction, and that's what pays the home off eventually. So if you're doing a 15-year loan, pays it off in 15 years, 30-year pays it off in 30 years. But that principal reduction is something that you access when you sell the home. You get that additional wealth benefit, or you have access to it through, say, a home equity line of credit where you can access that additional principal savings. And that's one of the big components versus, owning versus renting, is a portion of that payment is actually going back into your bank account eventually, versus renting, it goes into the landlord's bank account. Now, the third component is tax savings. And so I'm not a tax accountant. You would want to talk with your tax advisor, but most people are able to offset a lot of their income through tax savings through home ownership. So the first part is a mortgage interest deduction. The second part is deducting a majority of your closing costs in the year that you purchase a home. And so these are things that can help reduce the overall cost of that home and of that monthly payment as well, which again is a stark contrast to renting, where you make that payment to your landlord and that payment is gone. However, on a home, as you're making that payment, you're likely going to get some of that back in terms of a tax refund at the end of the year. And the reason for that is the government wants you to borrow money. And why do they want you to borrow money? Because we're a debtor nation, and for them to be able to print additional funds and the banks to be able to print additional funds, they need you to borrow money. They need the bank to loan you money to be able to do that. And so they offer tax incentives for you to do that. And then the other thing is, if this is not your primary residence, if you are renting a property, they want to give you tax incentives because, let's face it, the government is terrible at being a landlord. And so they provide incentives for landlords to provide higher quality housing for US citizens. That fourth component is the fact that you get typically a fixed rate mortgage, so your mortgage payment stays flat other than potentially your insurance or your taxes going up. But the main component of it, your principal, your interest, it stays flat over the life of your loan, versus rent, which typically goes up year after year after year. Those rising costs of rent, each an additional every single year, adds up, because if you look at the averages, homeowner housing cost to income ratios is on average about 17% versus renters that are now pushing 30%. Well, why is that? It's because their rent keeps going up year after year, and homeowners have their payments fixed at a low price. And so that delta, that 13% delta between 30 to 17%, creates extra wealth for homeowners. They can reinvest that by buying a rental property or buying additional stocks or buying precious metals, or even investing some of that back into themselves in terms of going on a vacation. But that is how another big reason how homeowners are able to build more wealth over time versus renters, because they just are flat out paying less money over time in terms of their housing cost. So why is all this so important? Well, our country is built on having a strong middle class, and there's an increasing gap between people that own assets and those that don't. And you don't want to be caught on that side that doesn't, because of all the massive inflation that we're having in this country. Even though it's starting to get under control as of the recording of this video, it's unlikely to stay there with all the deficit spending that our government continues to do. So one of the things, again, that's made our country so strong is this middle class. It's also a big advantage just to be able to have a backyard for kids to play in, and just having a great family environment growing up for the kids. Also a big benefit for not only the individual owning the home, but just for society as a whole, is typically people that own homes have a high pride in ownership and higher community involvement as well, which makes the community a better place for everybody involved that's living and investing in home ownership.